Hey YouTube, it's Nick here. We're going to be doing a market watch video today. Now, it's really quiet. It's July 3rd, so there's hardly anything going on in the market. The whole purpose of this video is going to be where stocks go for the rest of the year. That includes S&P 500, the Nasdaq, AI, and crypto, and kind of how everything right now is affecting us and what's it going to do later down the line. I'm going to kind of give you my game plan for the rest of the year. The whole purpose of this is I'm a retail investor just like you. I'm not a hedge fund manager. I'm not someone that built up a business and then boom, hey, here's my portfolio now at $100,000. Right? We're going to be building this from the ground up. Kind of go over a little bit Bitcoin and if we're going to be seeing a correction now. As far as the portfolio goes, we're actually up compared to the most recent video I did where I kind of broke down my entire portfolio. We're up about $200. Now, some of this is some inflow of capital, and on top of that, it's also an increase because of Bitcoin. Bitcoin and Ethereum, gold, everything in my portfolio is actually doing okay. The only thing that is down a little bit right now is the S&P 500 and the Nasdaq, slightly, just slightly. But a little bit over here, you'll see this is kind of what we're holding. This really isn't going to be a portfolio video, but as you see, we're kind of making up some of our losses right here. But I still think that we're due for another drop. So I'm not I'm not too pressed about it, but it is good to see that number go up sometimes. So kind of the main thing that is leading headlines right now is crypto. It is up today. XRP XRP is always in the news. Now, I'm iffy on XRP because one, while Ripple does some great things, it they don't you don't necessarily need XRP if that makes sense. And a lot of the things that they're doing don't necessarily require XRP to be involved. And on top of that, most of the coins are held by people on the inside, so they can literally dump it on you at any time. So if you are an XRP buyer, this is probably a good day for you. Like I said, Bitcoin's kind of leading the way a little bit. It's kind of maintaining that 61K range. Main talk of right now is that the Dow's been putting in all-time highs. S&P is doing well. Nasdaq, everything in the stock market has been doing well this year, even though it's been a midterm year. And for the people that were in way before this year, a lot of people have made some good gains, and you see the big series at 16.5%. So this is actually it's still a decent time to buy. We're still in fear on both sides of the market. Now, stock market is just regular fear, but even crypto, it's extreme fear, and obviously why. We're in a bear market. We get these relief rallies. It only lasts for so long, but the main thing that's kind of been driving headlines as well is the jobs report. So that's what's come out. So we're gonna talk about this for a little bit because it does affect how markets move and where people go from here. And we're just gonna hop straight into it.
In terms of non-inflationary growth, but we've got to figure out what's going on the supply side.
Yeah, we spoke to Brian Moynihan yesterday, and you know that Bank of America is among the most aggressive out there. They're telling clients to expect 3 rate hikes by the end of the year.
Yeah, I don't know where that comes from, Maria, and it wouldn't surprise me if they were going to revise that down. I think they were a little bit too aggressive in this 3 rate hikes.
It's funny, Mark, but Brian was talking about what his economists were talking about with their prediction, and they talked about inflation longer term for the reasoning behind the 3 rate hike prediction.
Yeah, I don't see it. So prior to this number coming out, I think about 1 was being priced into the market. I would have to assume that that's going to be priced out with this 57,000 number for payrolls. Maria, the biggest thing that jumps out to me, and I can't figure out how we arrived at this math, but as Cheryl said, in leisure and hospitality, we lost 61,000 jobs there leading up to the World Cup, which does not make any sense to me at all. I actually expected us to come in with a better number due to the increased hirings for, the hotels and the restaurants and all the things that are contributing to this World Cup craze that's taken our country by storm.
Yeah,
so that is a head-scratching component of this where I can't make sense of it.
Yeah, it's like the
All right, we're gonna stop it right there. So leisure and hospitality, that's actually an interesting thing to see. When everyone's stressed, let's get one thing out the way. As much as they say there's jobs, there's numerous videos you can find on YouTube of people not getting hired. They're putting in thousands of resumes. Everyone can't afford where they live. People are moving in their cars. Like leisure is one of the first things to go. And kind of the way I see it, because I'm surprised it's not here. I'm actually surprised it's not here. But the one of the things that you've seen that have gotten a boost is professional and business services. So you're probably asking what is professional and business services? So that's your CPAs, bookkeeping, payroll, right? Accountants, right? Law firms, consultants, engineers, or architects, software, IT, right? Advertising, marketing, right? All these things, staffing agencies, all these things. So there's 32. There's a 32K, 32,000. Could I have it in my notes here? 32,000 increase in there. I'm surprised they didn't, or 36, my bad. A 36,000 increase in jobs in those sectors. So to me, it sounds like basically the economy's kind of um just leveling out. The things that are technically in demand are just those safe jobs that people that are boring and repetitive, but more times than not, it would keep you secure in most economies. And at the same time, it's still competitive, right? But that seems to be what's going on. Now, when you look at leisure and hospitality and the hotels, like, okay, one, I mean, soccer's popular, but it's not the NBA, right? It's like, or it's not even American football. But here's my thing with that is it just sounds like the front desk staff are getting cut, right? And if you have a hotel, like, okay, you need some maintenance people, right, to take care of maybe plumbing, heating, right, or you even need janitors, right? But you don't really need a bunch of front desk staff. Like, and I think a lot of places, especially customer facing roles, they're kind of moving away from having employees in those roles. Even looking at like Airbnb, like you don't need to see the host more times than not to book an Airbnb. You have QR codes, you have key fobs, right? There's alarm codes you can put in. So there's not much need for the customer interaction. And a lot of people, well, maybe not a lot, but some people they kind of prefer it that way. I know I'm like that sometimes. Like if I go in somewhere, I want to get what I want. I don't want someone trying to upsell me and sometimes people just have bad attitudes, but I think the main thing is that a lot of these companies are looking at what do they need, what can increase productivity. That's been the main thing this entire year. How can we increase productivity, cut costs, and make as much money as possible? And you don't need a bunch of front desk staff greeting you. Like, a lot of people don't want to talk to someone, but what they don't show is that there's 32,000 job, or 36,000 increase in the professional and business services. Healthcare, healthcare saw about 46,000, and then they added in private education, the construction one, right? That makes sense. It sounds like the bare bones repetitive jobs that require you to have some level of intellect to do, that seems to be what's kind of growing. And for lack of a better phrase, like, to these employers, like, if you don't have a skill set, then you're effectively useless to them. And I don't have an answer for it. I really don't. I wish I did, but like, I'm just like everybody else. We're trying to make it out here the best that we can. But one of the things that you see go when we're in a fearful time like we are right now, even though they're blasting you every day with headlines saying XR not XRP, but that AI is rolling, we're still in fear, right? And this is just people that can't invest, right? What about the average American? And I think a lot of these analysts, like, when they make these when they make these claims, or and they have these talks, not consciously, but they don't think about the average American. They think of themselves and their colleagues. So they're like, not everyone's a business analyst. Like, there's some people out there that are really okay living normal lives. They're not trying to rock the boat. They're not trying to be famous or anything like that. And and I think they effectively forget about those people, because while there is jobs, there's a lot of jobs, but a lot of people just aren't qualified for the jobs, if that makes sense. And sometimes it's not even intellectually qualified. Sometimes it's physical. Not everybody can do construction, and if you do, like, you know how many people you see, like, you have to destroy your body doing jobs like that. And and not that Americans have cared about their health, right? We're the most unhealthiest country in the nation, but, like, some people are not qualified for some of these jobs. There are 8,000 government jobs, and only like, okay, you know how many people are unemployed? They're not qualified. Like, all these people standing out here in front of, they're not qualified. They're not going for government jobs. Construction, it's like, yeah, it's tricky. Like, yeah, yeah, there's jobs in that, but you're just destroying your body, and it takes a certain type of person for jobs like that. Manufacturing too, right? You have these warehouse jobs. Um, but leisure and hospitality, those are jobs where you're not really doing, like, not in a bad way, but, like, you're not doing anything. Like, like you're not doing anything. And I think that's why it got cut because it's like okay, they cut 61,000 jobs. Are the hotels and are they just gonna go out of business? Right? No, they're not. And most of the time what we're seeing is that all these people are gonna be seeing record profits and they're gonna be and they're just going to be moving on and there's going to be a lot of people out here that are trying to make ends meet and it's just not it's just not easy for them and I want to see if there's anything else we got here so we don't care about the Asian markets
Of
right
the
now.
jobs were added. So under President Trump, all of a sudden, the small mom and pop shops are doing better. They're firing on all cylinders. Small business is back. Medium-sized business is back. And that is really the heart of this country and the heart of this economy.
You're right, but you know why? Because they are expensing like mad right now because of what was in the big beautiful bill. When you actually understand what was in that legislation, where the tax code changes benefited and encouraged businesses to hire new workers, to invest in infrastructure, invest in R&D, that's what you're seeing, and they're actually taking advantage of it, Nancy. And we're seeing the fruits play out from that legislation that the president signed into law last year.
Yeah, and I think the point about cap
Yeah, cool. All right, capex, right? Yeah, we know. People are investing for the future, so it means there's going to be more earnings made for these companies. Cool. But yeah, that's kind of the main thing. So the jobs report came back. It didn't go as people thought it would, but they still, in their eyes, they think this is good. But if you hop on YouTube right now, there's so many people that cannot find work. They can't. A lot of these places have frozen hiring. I've worked places where people were remodeling a place and then they got let go once the remodel was done. Now, what they're doing, I don't know. But that's the main thing that's kind of been driving everything is that the labor force in their eyes, jobs are going up. Um, in this in everything nothing's 100%, so not everything that should be reported is even being reported. So we got that. We're not going to really talk about this. It's just talking about beef and stuff with 4th of July. I mean beef prices are up, like yeah, beef is up, but this is the next one I kind of wanted to look at.
Millionaires are betting on a different asset for returns ahead. Robert Frank is here at Post 9 to help explain. Hey, Art.
Morning, Carl. Good to see you. Well, younger investors planning to add more alternatives to their portfolios in hopes of better returns. A survey of millionaire investors from Bank of America found that 88% of Gen Z and millennial investors plan to increase their allocation to alts in the next few years. Two-thirds say traditional stocks and bonds can no longer provide above average returns. Their favorite segment is real estate. About half of younger investors currently own real estate as an investment. 40% plan to invest in more of real estate in the coming years. Real estate also the top alternative for the ultra wealthy. We're talking about those with 25 million or more in investable assets. When they were asked which alts had the greatest opportunity, real estate ranked first for the ultra wealthy at 30%. That was way ahead of private equity and even stocks. Ultra wealthy investors own almost every form of real estate, from primary homes to REITs, rental properties, commercial real estate, and of course increasing.
Now I like that REITs are in here. Most keep in mind they're talking about millionaires. Talking about millionaire, but most people the American dream is having your own home. And while home prices are kind of going down, uh a lot of people aren't able to buy homes. And most of the time when you are able to buy a home, you have to have a two-person income to at least even be able to sustain that. And that's a whole nother can of worms because how are you gonna get this two-person income, right? Mary, we're not gonna get into it, right? But trust me, it's not as easy as they're saying it right here. Now, REITs, that could be something decent, especially if you have it like in a Roth IRA. A lot of things like this pay dividends. So that would be something good to look at. Rental commercial properties. Now I am involved in that a little bit. I do rent out sections of my place, so I am aware that there is some money to be made there. And honestly, yeah, land is king. If you own land, you're wealthy than a lot of people. Yeah, you got that going on there. But that's kind of the main thing that's kind of driving the market. We don't know what's going to happen. So they can get on here and talk as much as they want, but no one knows exactly what's going to happen. And as far as where I think this and AI and all that goes from here, and we're just going to switch over to the Robinhood account and go to basically our stock portfolio. Actually, I'm not even going to do that because I don't like doing it on here because it puts my buying power into the equation. That's why I like having it on Ask Flash because it just shows my position. That's actually what I want to show right now. But my main goal moving forward for the next or for the rest of the year is to build up cash, keep it somewhere where it is earning a yield. Because you don't know what's gonna happen. I restarted buying gold again. If you want to know why I'm buying Pax Gold, I talk more about that in my previous video about breaking down my entire portfolio. So we're doing that again. I just had to get back in there, and we're gonna build it up. And keep in mind, retail. I'm not dumping hundreds of dollars in here. This is slow DCA into long-term assets that I truly believe in. But we're gonna need a correction in these stocks. As much as I would like for it to go up, as much as I would like for it to go up, how are we doing? As much as we're up about 1.3%, right? As much as I would like it to go up, we'll talk about that later. But as much as I would like it to go up, a lot of these things aren't. It's not sustainable if it does keep going up. So I do think we're gonna get one more correction, and that's actually the last video that I do want to talk about is Tom Lee. He was talking about something. I spelled correction wrong. So here it is. This is the last one I wanted to look at any day.
Yeah, and I can see the conditions because inflation, I think the risks are diminishing with today's jobs report, but also oil lower. So that means the bond market, which has been hawkish and leaning hawkish, could actually lean dovish. That's a tailwind into year end.
You agree?
Yeah, I think that's right. So I think Fed fund expectations are too high. They're coming down. That's broadening things out. If you look at the banks, they got through the stress test quite well. They're starting to pay out dividends, buybacks, so on and so forth.
Yeah, immediately, right? The news came out. They were like, okay, here's this for you, and that for you, and that for you.
And let's go, right? And so what we're also talking about is M&A. M&A activity is going to start picking up. That's going to help out the broadening. So I think it's all fair. You know, what we're looking at is housing stocks, which have been beleaguered for a long time. And we're also looking at gold in the material space, which will do well as that hawkishness comes off the table.
You know, you never want to be trying to catch a falling knife, but to me, I'm going to probably guess that those pullbacks are viable. I think that momentum still has a long-term history of working very well, and it's really central to a lot of quantitative systems, so I think it comes back. And then on the DRAM trade, I know people are trying to call the end of the cycle, but, you know, what we still haven't decided is there a new cycle? Because, you know, robots and machines are going to be semiconductor and RAM intensive much more than people, so it might be a long cycle.
Well, I don't know that people like the professor, for example, are trying to call the end of the cycle as much as they're trying to call the end of the craziness, right? I mean, stocks going parabolic, that can only go on so long. There is that thing, it's the pause that refreshes, right? They say that for a reason.
It's true, but what they have to keep in mind is that multiples of stocks like Micron are still, 8 times or probably today 7 times.
Probably like 10 times now. Well, maybe with the pullback.
Yeah, I think it's probably close to 7
But it's sort of got
times.
from like 8 to 10.
Yeah,
which is historically maybe rich for stocks like that are generally deemed to be more cyclical in nature. We're making the call, many are, that no, this is different. This is different this time. Now this is a secular new cycle, as you said.
Yeah, I mean, so NVIDIA's at 16 times. It reminds me of how Apple was viewed as a hardware phone stock for hardware maker for a long time. People thought it should trade at 10 times earnings until it re-rated towards 30. So to me, I think there's still that re-rating that's going to come with stocks like NVIDIA.
Speaking of earnings, you're going to get them soon, right? The banks are going to start. It's hard to believe they're already right here around the corner. Good things are expected. Actually, that's a misstatement. Great things are expected.
Yep. So that's the one thing we're working.
Yeah. Yeah. We're going to be in for a wild ride, but there does need to be a correction. And that kind of brings us to the last part of all this is we're not going to jump too much into it, but basically there's been a rotation out of the Max 7, and they've just been going into other stuff. And is it a sign of a healthier bull market, right? You have oil prices falling, easing bond yields, right? All this stuff going on. But the main thing is that this isn't financial advice, but what I'm going to be doing is continuing to DCA my low cost index funds. As great as some of these people are, they have no idea what's about to happen in the market. Anything can happen. No one expected COVID, right? No one expected the Iran war. No one expected the FTX crash in 2022. No one knows what's going to happen with these markets, but low cost index funds are the play. Now, if you want some AI exposure, what I will most likely do soon is potentially add DRAM into my portfolio. Um, I, I'm very bullish on AMD. Very bullish on Micron, on all these companies. But and here's the thing. I'm already getting exposure to it by holding the Nasdaq QQQN. So like I think we'll get AMD to maybe 1200. So if I can muster up some capital, I might just buy a share. Right, that's a $500 gain. I'll take that. I'm retail. I'll take a $500 gain. It's not life changing, but I'll take it. And then I'm gonna continue DCing continue DCing my Bitcoin. We're gonna be at zero point zero 0.04 soon. Ethereum, I'm doing like $1 a day to that. Pax Gold, we'll get in when we can get in. If I can get anything under 4,000, that would be phenomenal. But low cost index funds are my move. That's the only thing I'm doing. As far as BTC, since we are above 60K, I had to stop my $35 a day purchases because I think at least for me that's a little bit expensive. So I had to cut it in half. So right now it will continue about 15 to $17 a day. And then if we go even higher, then we'll have to drop that to about 10 or $5 a day. But I hope you enjoyed the video. Let me know for anyone that got to this point, where do you think the market is going? Don't be afraid. Check out my other video. The whole point of this video and kind of overall my channel is kind of building everything I have from the ground up. Because I know that I'm not gonna stop investing. Not bad. I know I'm not going to stop investing. So that's the main thing. So keep a lookout on that. Like the video if you're new, and then we'll catch you back next time. And I hope you have a good day.